Is the market low in place in equities, and is the top in place on oil? I've had this question come in at least a dozen times here today. So, very valid questions considering the wild volatility that we've had over the past few weeks. So, I want to dive in. Let's take a look at the technicals. We can all talk about what we think should happen here going forward, but the technicals are the key piece here. So let's dive in and take a look at the market big picture. I'm also want to update a trade on USO that we talked about over the weekend. I want to talk through that one as well, just to kind of give an update on why we like that trade and why it's already into profit here today. So let's start out with the daily chart of SPY like we normally do. Very interesting reversal. Markets incredibly weak overnight. Futures were down all throughout the overnight session. That continued into the open today. But then, as we've seen so frequently, the bulls stepped in, they bought the dip, and we rallied higher throughout most of the afternoon. A lot of that was aided by some Iran headlines. It sounds like there's some positive headlines coming out of the conflict here. We'll see if that materializes into anything over the next few days, or was it just another round of rumors that are dispelled here overnight. But with that afternoon rally, look at where SPY closed. That is a huge reversal intraday. SPY closed $16 off of the low from this morning. That's a big, big move, right? You're only going to see these types of moves in very news-driven environments like we're in right now. Notice where we closed, though. We also closed right on top of some key resistance levels. Right, we've got these blue lines on my chart at 679.76 and 677.74. Those are the 89 and the 100 period EMAs. We've got to get up through those on a closing basis over the next few days if we're going to see some follow through here and potentially see a meaningful low in place. Right, the rally was impressive today, but the missing piece now for weeks has been the follow through into multiple days. Every time it looks like the market's going to break to the downside, fast forward 24 hours, the dip is bought, and vice versa. Every time it looked like the market wanted to make another run up towards the all-time high, fast forward 24 hours, and we're right back to the downside. I'm still very skeptical of this rally this afternoon, but again, the market is looking for a reason to rally up. People are looking for a potential green light to get back into this market. If we can break up through those blue lines on my chart, we have some further resistance levels up here, between 681 all the way up to right around 687.86. We've got to break up through that range. So the bulls, if we're going to see this be a meaningful low, the bulls had the work cut out for them. They've got to continue to buy up this dip. They've got to continue to maintain the buying here over the next few days. On the downside, if we find resistance here over the next 24 hours and roll right back over to the downside, the next areas of support really aren't down until the 200 period SMA and EMA. You can see those red lines on my chart down around 656.87. Right, that would need to be broken if we're going to see that follow through. And a lot of this really depends on the headlines here. The technicals are saying, hey, we could potentially see that low in the near term, potentially could see some follow through over the next few days. Again, I'm skeptical. I want to see more follow through over the next few days, and a lot of that's just going to depend on what the headlines look like here over the next few days. The volume, 94 million shares traded today on SPY. Very healthy volume environment. That has been the case now for the last few weeks. The ATR, up above 9.60 for the average to range. Very active environment. And what's very interesting to me is look at the VIX. Let me stretch this out a little bit so we can see these numbers. The VIX closed at 25.5. Looks like a really elevated number. However, we traded all the way up to 35.30 earlier this morning when equities were down near the lows, the VIX was up near the highs. That could potentially be the near-term spike that we needed. We talked about this in the videos last week. Even though the VIX was elevated, we didn't have that explosive move that we really were looking for if we're going to get a meaningful low in equities. Well, we potentially got that this morning. I mentioned if we're going to get a meaningful low, I really want to see that spike up in the VIX, that move where people are saying, get me out of equities at any price, doesn't matter. We finally started to see a little bit of that this morning. The VIX got up above 35. Could that potentially be the near-term top in the VIX? Could very well see that be the case. to where now we still have some very juicy premiums in the options. Perfect for those of you that like to use credit spreads. I'm part of that group, so I love to see the volatility elevated. But now going forward, anytime that we've seen those near-term spikes in the VIX, oftentimes they'll last a couple of days, potentially a couple of weeks if you're lucky, and then we start to see it normalize. We could potentially see that normalize, especially if we start to see some relief headlines out of the Iran conflict. We could definitely see that fear premium sucked right back out to where now you've got the VIX, potentially back into that 18 to 23 range, and that could happen in a hurry, right? So would love to see it. There's definitely trade opportunities everywhere you look right now. We have extremes in price in so many areas. A lot of these big market leaders have been beat up. They're due for bounces, so there's opportunity galore here over the next few days. And I mentioned it last week in the videos. Don't fall into that fear trap. You turn on any type of media, traditional media, you turn on TV, you look at print media, you look online. Over the weekend, everybody's trying to sell that fear narrative, right? They're trying to scare you to the sidelines when in reality, the opportunity is there. Be open to trades in both directions, manage that risk, put on those high probability trades that we've walked you through. The opportunities are there. You don't have to take massive amounts of risk. You don't want to go to the sidelines. You don't want to fall into that trap because you're going to potentially miss out on an opportunity. Doesn't mean we're going to have never-ending winners here. We're going to have a mix of winners, losers, and break-evens. That's just part of trading. You just don't want to miss out on this opportunity that we're seeing right now. Let's go over and take a look at oil here. We talked about this trade. We talked about it a couple of times in the videos from last week. But if we take a look at USO, building on what we just mentioned with that fear narrative, when we take a look at the oil markets and we take a look at energy, we have had some extreme moves. It makes perfect sense, right, with everything that's going on in the Middle East. Well, last week, if you take the headlines out of the equation, right, you take it, I know we can't do that, but just work with me here a little bit. If you take the headlines out of the equation and just strictly look at price and the technicals on the chart, if we take a look at this 130-minute time frame on USO, look what happened last week. We got up past a 3 standard deviation move on this chart. It doesn't mean it can't move higher from there, but strictly from a numbers perspective, this is a level that will oftentimes lead to a period of consolidation or even a reversal in the other direction as the market starts to digest the extremes. All right, so when I start to see blue pop up on the pulse, that has me either interested in looking for more of a neutral or a bearish type position, expecting either that pause or a pullback. Didn't want to just come in and buy long puts. Couple of reasons for that. If I buy a long put, I'm completely dependent on the market moving lower. I've got one way of making money. And in this case, to buy a long put, you're going to pay up for those. They're very expensive because volatility is so high. Instead, we talked about selling a call credit spread, lowering the cost of the trade, leaving us still with a fully risk-defined trade, but giving us 5 ways of making money versus only having one way of making money if we bought the long put. So notice what happened here. I'll take a look at the trade that we went through in the video from last week. We'll talk about that in just a moment. But look what happened here. Right? We had this huge high at 124.07. What happened? Price has started to pull back, and we're already $20 off of that high. Am I saying the high is in? Anything can happen here over the next couple of weeks with this conflict in Iran. So much uncertainty there. I could very well see big moves in either direction. The nice part about a credit spread is it's very forgiving. Do I need an explosive move in either direction to make money? I don't. If I go back to the trade that we talked about here last week, let's go over to USO. And we talked about going out into the March monthly options, the ones with now with 11 days left to expiration. Look at that IV percentile. It's at 97. If you go back to the video from last week, we had an IV percentile at 100. With the selling that we got on oil off of the highs today, look at how much volatility is already contracted. It's still very, very elevated, but all it takes is a little bit of a reversal and that extreme uncertainty starts to normalize. That volatility contraction benefits the trade that we talked about last week. And the trade that we had on was the 115-120 call credit spread. All that meant was I was selling the 115 call and I was buying the 120 call at the same time. And we were talking about that trade at around $1.32 last week. We were talking about collecting $132 per spread. That was my max profit on the position. and our max risk was $368. The most I can lose is that 368. It wasn't an ultra risky trade. It was a very forgiving trade, and it is fully risk defined. Those are the types of opportunities that I'm seeing in this market. Doesn't mean we have to load the boat, throw everything we've got at oil. It's just a trade. So now we had the reversal today, and now the spread's already down to $1. That's the mid price at the close. Market's still pretty wide here. Makes sense. Really wide going into the close, all with all that overnight risk. But what I'm looking for out of this trade, I'm looking to buy it back around 66 cents over the next few days. I can get that closing order in place already. Set it to a GTC or a good till cancel order. That way, over the next few days, if we do hit 66 cents, that order can get filled. I'm out of the position, book the profit, move on to the next trade. Right, so again, an example where it's really easy. If you looked at that USO chart last week, you're saying, I don't like the position because of all of the news risk. It's just the trade. I'm just looking for the next trade in the sequence, risking less than $400 per spread, and now we're potentially booking a profit over the next day or two. Again, it doesn't guarantee anything. We could see the market, reverse yet again overnight, and we could see oil up huge again tomorrow. Anything is possible, but again, we're in a fully risk-defined trade. So this market, there's so many lessons to be learned out of this market. The main one being, as I mentioned last week, turn off the news. Don't let the news influence your trading. Let price action dictate what you're doing. If you can do that, you're going to drastically reduce your stress level. You're going to be more focused on what really matters, and that's price and technicals on the chart. That's going to tell you everything you need to know. All right, so we'll track that USO trade over the next few days, see if we can close it out for a profitable position. And then we'll be back over the next few days. I'll walk you through some additional new trades that are setting up for us. Again, there's no shortage of opportunities here this week. It should be a pretty wild ride over the next few days. So as always, if you have questions, feel free to leave a comment on the video, or you can email me, info@netpicks.com. We're more than willing to help out with any questions there. All right, so I'm going to wrap this video up here. I'll be back with you guys over the next few days with our next video.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk